Welcome to this explainer. When we think about the massive boom in artificial intelligence, our minds usually go straight to the flashy software companies or those massive graphics processors. But today, we're diving into the absolute bedrock making all of this possible. We're looking at the unprecedented, staggering success of South Korean memory manufacturer SK hynix. What we're seeing right now isn't just a solid financial quarter, it's a historic, ground-up restructuring of corporate wealth, entirely driven by this insatiable demand for AI infrastructure. Let's get right into it.
Okay, I want you to just think about this mind-blowing number. Imagine getting an average bonus of $477,000. Because that's exactly what every single SK hynix employee could be taking home this year. Just let that sink in for a second. We aren't talking about C-suite executives here, we're talking about the average worker on the floor. And get this, because the momentum of this AI supercycle is accelerating so fast, market analysts are actually projecting that this individual bonus could practically double to nearly $900,000 next year. Absolutely wild.
So you're probably wondering, how on earth does a company manage to hand out $500,000 to an average worker? Well, this unbelievable wealth generation stems from a historic agreement by SK hynix management. They essentially agreed to completely scrap their previous bonus caps and allocate a flat 10% of their annual operating profit directly to their 35,000 workers as performance-based payouts. And when you factor in analyst forecasts projecting a massive 250 trillion won, which is roughly 169 billion US dollars in operating profit for 2026, you end up with a bonus pool so astronomically large, it's literally changing the lives of their entire workforce.
Now, it's really fascinating to contrast this incredible workplace harmony with their biggest rival, Samsung Electronics. While SK hynix workers are cashing these historic checks, Samsung is dealing with some pretty serious internal turmoil. You see, Samsung offered a very similar 10% profit-sharing framework, but their 77,000-person labor union flat out rejected it. They're demanding a 15% cut of their own massive AI profits, organizing major rallies, and even threatening general strikes to get it. It really goes to show just how intensely the leverage has shifted toward the workers in this highly specialized semiconductor industry.
To wrap your head around how these massive payouts are even financially possible, just look at the explosive vertical growth we're dealing with here. In the first quarter of 2026, SK hynix posted a jaw-dropping 198% year-over-year revenue growth. They rocketed from roughly 17.6 trillion won in Q1 2025 to over 52.5 trillion won, that's roughly 35.4 billion US dollars in just a single quarter. It's the kind of explosive growth that just completely rewrites a company's balance sheet overnight. But, this massive influx of cash isn't solely enriching the employees. It's also allowing the company to rapidly bulletproof its own financials. Thanks to this absolute tidal wave of AI-driven revenue, SK hynix managed to slash its corporate debt, bringing it down from over 22 trillion won to 19.32 trillion won in incredibly short order. So they're simultaneously rewarding their top talent while heavily fortifying their entire corporate foundation. Talk about a win-win. So what's the secret sauce? The primary catalyst driving this meteoric rise is the world's absolute insatiable demand for HBM, or high bandwidth memory. As artificial intelligence evolves from just training those large language models into actually deploying real-time agentic AI all over the globe, standard memory simply cannot keep up anymore. HBM has become the critical bottleneck and the absolute backbone for modern AI accelerators. Without it to feed data to the processors at lightning speed, the most advanced AI chips in the world essentially become useless paperweights. And right now, SK hynix is the undisputed king of producing it.
Unsurprisingly, Wall Street and global financial institutions are definitely paying close attention. Mirai Asset Securities just drastically upgraded their target price for SK hynix by 73%, hitting 520,000 won per share. But even more importantly, they raised their 2026 operating profit estimate for the company by an incredible 31%. Financial analysts are clearly recognizing that the sheer scale of this hardware demand is completely blowing past even the most optimistic previous models.
But here's a really interesting detail you might totally miss if you're only focusing on the AI hype. Analysts attribute this bold upgrade not just to those specialized HBM chips, but to a much faster, much more robust rebound in the pricing of everyday, conventional memory products. See, because SK hynix is dedicating so much of its wafer capacity to producing HBM, they've actually constrained the supply of regular DRAM, the stuff used in your everyday servers, PCs, and smartphones. And that constrained supply, it's pushing standard memory prices up by around 5% quarter-over-quarter, creating this massive secondary stream of revenue.
And SK hynix is absolutely not resting on its laurels here. To keep this momentum going, they're running a highly aggressive dual-generation playbook. Step 1 is making sure their current HBM3E chips completely dominate data center installations today. They're even positioned to be the first supplier for Google's latest custom AI chips. But Step 2 is simultaneously preparing the world's very first mass production system for next-generation HBM4 memory. They're making absolutely sure they don't lose their technological edge as this AI supercycle barrels forward.
To actually pull off this aggressive product roadmap, they are spending money almost as fast as they're making it. SK hynix is pouring over 20 trillion won into their massive Cheongju M15X production facility. This site is going to be the absolute epicenter of their HBM dominance, and it's set to kick off pilot operations with its first cleanroom up and running by May 2026. This is exactly the kind of jaw-dropping scale required to stay ahead in the global semiconductor race.
Now, it's important to point out that this extreme corporate success isn't totally without controversy back in South Korea. Citizens on various forums have pointed out that companies like SK hynix benefit heavily from the K-Chips Act, receiving over $13.6 billion in state support over the last 2 years alone. The public argument is pretty straightforward. If taxpayer money subsidized this infrastructure, this massive financial windfall shouldn't just stay private among the company's employees, but rather benefit the public more broadly.
And we definitely have to provide a reality check here. Because as we all know, the tech industry is notoriously cyclical. Market intelligence firm TrendForce is actually warning of 3 looming headwinds that could disrupt this incredible supercycle in late 2026. First up is the potential for HBM pricing corrections, especially as competitors like Samsung and Micron ramp up their own capacity. Second, aggressively tight supply lines could end up bottlenecking the actual manufacturing of these chips. And third, you have the ever-present, totally unpredictable geopolitical risks that constantly impact global semiconductor supply chains.
So the crucial point I want to leave you with today is this. We are witnessing what is arguably the greatest wealth generation event in the history of memory manufacturing, completely transforming company balance sheets and employee bank accounts alike. But looking forward, will the unprecedented, seemingly endless demand for AI infrastructure propel SK hynix safely through these upcoming supply and pricing challenges? Or is this historic profit cycle destined for a sudden, sharp correction as the market inevitably balances itself out? That is the multi-billion-dollar question that will undoubtedly define the tech industry over the next few years. Thanks so much for joining me for this explainer. I'll see you in the next one.